Eric Mwatha with Mwatha.com for March 14th and March 15th, 2015. Let's take a look at how markets closed on Friday. We see that the Dow was down off the lows, but down about 0.82. Nasdaq was down 0.44. S&P 500 was down 0.61. Gold was unchanged, pretty much up slightly. Here's the big mover, which is crude oil. And then we see the VIX was up also slightly off the highs of the day. For the week, the S&P 500 was down 0.86. We see that for the week, the Nasdaq was also down 1.13%. And for the week, the Dow was down the least, which was 0.60%. So let's take a look at the charts. We begin by taking a look at the Nasdaq weekly. And we see here that as of right now, we are still holding above the prior weekly closing high of 4806.86. So the breakout is still good. We see that the Nasdaq is still holding above the 10-week moving average. So nothing is broken yet as far as price is concerned and the 10-week moving average. We can also see that on the RSI, yes, we are pulling back because of this resistance, which was experienced here about 2 weeks ago. So that pullback at that point makes sense. Does that mean that the market has to go on and break the support on the 10-week moving average and also break the support below 4806? I'm not sure. Of course, depends on how things go, but the weekly has set itself up, if it wants to go lower because of this resistance. If we take a look at the Nasdaq daily, I think there's a strong case that the market could actually bounce. Number one, as we've seen on the weekly, we are holding above the prior breakout level, which is great. There, that breakout has never been violated yet. The market is holding above that. And then there's a line here connecting the daily closing lows, the daily closing low there and the daily close there. You draw a line and it comes in contact exactly where we've been holding, especially at the lows of Friday's session. That held. So the market is looking okay. It's a pullback, but the market hasn't broken yet. Now, if you come to the RSI, we see a lot of evidence that the market is holding exactly, and I mean exactly where it needs to hold on this line here. And if you go back just to test the line, you can see that all these lows in the market have come on this level. All these lows. And so if you are using this to get your entry back into a market after a pullback, this is what has been working. And as of right now, surprise, surprise, or maybe even annoyingly as it might be if you're short, the market has come back here, held that low, and did the same thing here. So that's powerful line of support. There's another way you can look at this, and is to connect the lows on the daily like that, and you can see that this comes into play over the last couple of days when the market came back here and held. If that's the case, we are looking at a strong argument here that this is good enough to push the market back to new highs. I know that sounds fantastic, but that is the implication. Of course, if the market breaks the support line and trades below that, so if it trades below that line and also below the green line here, if it trades below those two lines, then the argument is going to switch and it's going to be a bearish argument. Right now on the daily, you can only make, in my opinion, a strong case for markets to bounce higher. Now let's take a look at the Dow weekly. And on the Dow, we still continue looking at this bearish setup where we made higher highs on the weekly price. That's one issue here. And also take note of the fact that we are trading underneath the previous weekly closing high of 18,053.71. So really this is a failed breakout. That could be a problem down the road. Also, don't forget that that higher high in price on the weekly did not push the RSI to new highs. It made a higher low, and that is a problem. Also, I need to point out that we are very close to 50 on the weekly RSI. As you can see, so we need to be aware that if we break below 50, we might have a big down week. So far, the market is holding above 50, so nothing is really broken also. If we take a look at the daily for the Dow, we can see that just like the Nasdaq, and so we can save time on the RSI, this line has held on the Dow, just like we've been looking at that possibility. That line has held, and you can pause the video and see that this is where the market has been bouncing, like the main lows. Take this main low here, nice entry, main low here, nice entry. We can take that low there, uniform activity below the line, back above it, and this low here was uniform activity below the line, back above it, and even this one. So all these have been where the market has found support and moved higher. So that's one line of support. Here's the other line of support on the daily. So we see that that has also held. So yes, the market's been up and down, trading around the 50-day moving average, but not broken yet. It would break only and when it moves below the blue line and the green line. That one would be the best time to consider that the market has broken. Right now, the market is finding support exactly where it needs to. If you take a look at the hourly, we can see that when we made these highs here, the RSI had been making lower highs. And so the pullback here makes a lot of sense because RSI was increasingly making lower lows while the markets were making higher highs. So this pullback recently makes a lot of sense. But is it the type of pullback that will break the market? Well, we haven't seen the evidence yet, because on the hourly, this line has been support. As you can see, support during this low. We recapture that level for a nice entry there, and even here for a nice entry back into the market. Uniform activity below the line, back above it for a nice low. It held here during these lows, and recently you can see it's gone below the line twice with uniform activity, which might explain why we are off the lows here. So I don't see a broken market in terms of the Dow from a short-term perspective. And so even though it looked like the market is acting a little bit volatile, it, in my opinion, hasn't yet to break. If we take a look at the Nasdaq from a 30-minute chart, what's interesting is if you take this line here, this red line that I'm now also drawing a blue line on top of. So there you go. So you have a red line, blue line. And you can see that when we made higher highs in price here, we had this making a lower high, the RSI. So that negative divergence line is what I'm trying to point out. So this line, if you kept and extended the same line, it has become relevant in the current market, because market did come here and show resistance, which was this high, and went straight down. And we moved above that line. So let me just spend a second here. We moved above that line all the way down and back above it. So we've weaved ourselves back above the line, and that might explain the lows of the day here. Hope that makes sense. And I'm going to try and explain this again. So this line here is this line that I'm drawing. And so what I'm saying is we had that bump, and then this bump, which was these 2 points. Market went down, which is this drop here. After some time, the market came back, hit that line, and came down, which is this point, which happens to be that high. But we've come back now above the line, below it, and back above it. And what I'm talking about is this support level here is what happened right there. Hope you can see that right there. And that is responsible for this low during the day on Friday. Also, two other observations, pretty quick, and we can see lower lows on the 30-minute chart here, while the market's technicals were improving. And those two lines did coincide with the lows of the day on the RSI, which is also the lows in price. So let me take that off and show you another quick point here. Off these lows here, this nice move right there. And of course, we know the markets went to record all-time highs on the Dow. That move here began on the RSI, jumped above this 30-minute line here. So that's where the move began. We draw a simple line like that. You can see the market has used that line before for a nice short-term bounce off these short-term lows. And on Friday, during the lows, it came below the line and back above it. So that was also another reason why, from a weird perspective, the market had that last hour reversal. Let's take a look at the Dow Transports Daily. And just like the other markets, so we won't spend too much time here, support on this line during the lows for the week, right here, and also support from the line connecting the lows. I think as long as that is holding, the market has not broken yet. If we take a look at the S&P 500 weekly, we can see just like the Dow, we had made higher highs in price, but lower technicals, which is the reason why we are pulling back. And also, we are below the previous weekly closing high there. So this is a failed breakout. And maybe we are going to look back down the road and be like, duh, that was the high. It's tough to tell, but the fact that we are not above 2088, which was the previous weekly closing high, could suggest that, and it's an argument that can be made, that the market's already broken and we are just trading sideways before the eventual break. And that is possible. I do accept that. So for the market to correct this, it does need to start trading, for example, back above the 10-week moving average. It needs to recapture the 10-week moving average, at least for it to be truly holding steady. Right now, it's below that 10-week moving average, which could be a problem. S&P 500 daily, and you can sure bet that this is what's been going on the major averages. There's this green line here. And you can see that the market has been bouncing on that green line with no exception over the last 2 years or so. Uniform activity below the line, back above it. It held there, which was those lows. Double bottom here, which was these lows, and on and on. And we can also see that on the daily, there's a line connecting the lows right there. So the market bouncing, I believe was Thursday, made a lot of sense because it held on that line there. It continues holding above that line. Thinking is that as long as that's the case, the market should be okay. Take a look at the S&P 500. Just want to show you one observation that I'm sure most people have already seen that, and it is support of this hourly line that connects the intraday lows in the market. And you can see we've held there twice. And the market is doing what it needs to do to hold together. So the market has yet to break down even on a short-term basis, because lines like this are still holding. One quick note also on the S&P 500, it held above this green line. And as long as it's bouncing back, for example, during this low here on the line, which was these lows, as long as it's doing that type of thing, the market is safe and is finding support exactly where it needs to during pullbacks. On the Canadian market, we see that had a down week also. For the week, down 1.48%. And you can see that it makes sense because ever since we came back to this line, we've been stalling. And so now it makes sense that this stall point here has brought the market down the last couple of weeks here, 2 weeks or so. Now the question is, what next? Take a look at the daily. And on the daily, we can see that connecting the lows on the daily RSI here, here, and now here could be giving it the stability it needs. So the Canadian market is holding on this line. As long as it's bouncing on this line, it might be sideways action, but it's good action. Eventually it might move higher. The problem is if it breaks that line, then that's going to be indicating lower prices. So the line needs to hold. Otherwise, for now, I think it looks okay, in my opinion. Take a look at the hourly for the TSX, and on the green line here is where it's been bouncing. You can take a look at this low here. It recaptured back above the green line during these lows, recaptured back above the green line there, came close here, which was this lows, and now we've moved from being underneath the green line to back above it. So if there was ever a setup where it needs to move higher, it's already done that. And don't forget that from the hourly, we can see that it made lower lows in price on the hourly there, but we see that technicals were improving. So short term, I think the market looks okay unless it breaks those pre-described support line on the hourly and also on the daily RSI. And take a look at the VIX 6 months daily. And what we see here is we had a nice wedge. We broke below that wedge here. So that break point, put an X, which marks the spot. And draw a line like that. So that is resistance level. The VIX came here during the week and is already showing resistance. We can see that it is also struggling to hold above this line on the RSI, which was resistance recently, here with this double top, which was the highs there. So the VIX did stall during the week, and if the VIX is stalling, the market should be okay. Also, we were watching the VIX hourly, which told us that the market was not as bad as it looked. You can see the VIX had come back to the hourly resistance here, and at the highs here, when the market was almost going down, the VIX stalled, and since then the market is generally, yes, it's been up and down, but the VIX has given us no reason to believe that it's going to move higher. And the best way to show you that is to show you this view, which is the 6 month view on the VIX. Let's go to the 6 months view on the hourly. And so the VIX is struggling to hold above this top side line. It's only when the VIX finally breaks out above this declining resistance line that it might put a little bit of pressure in the market. So the market is okay until the VIX breaks out. If the VIX is not breaking out, the market should be fine. Okay, let's take a look at the S&P 500. Back to the S&P 500. I want to take a look at the long-term monthly view, and this is a warning to all of us, including yours truly. And I'm going to draw a simple line there. There have been 3 instances over the last 15 years, 16 years, where the markets have had major bear markets. Major bear market here. Of course, you know this bear market. And now there's a huge question mark as to the next phase of this current market, which is, I'm going to put a question mark here. But I want to show you something consistent. When we broke down here in late or early 2000, RSI broke down right there. In fact, there was a break of a trend line there. I'll just do it like that. So that was your warning signal in 2000, beginning of 2000. We saw the same break late 2007, early 2008, which was good for these highs. And of course, you know the story after that. What I'm getting at here is there's an argument here that this is breaking down. And if it does the same thing it did here and here, if we break below here, you can be rest assured that's coming next. And that's the warning. So there's no need to panic, but keep that in the back of your mind, that things might be a little bit not what they seem, and the market might be concealing the truth that it wants to go down. So let's just keep that in mind. In fact, let me show you one more, if you don't mind, which is the MACDs. Number one, take a look at this break in 2000. Was the MACD break there? And also there was another break here late 2007 on the MACDs, which corresponded with this break. And now there's a possibility of another break here. So if this breaks also, that could also suggest the possibility of lower prices. There's also, take a look at this. This is almost the same distance. The distance between the MACDs here is almost the same as the distance here. So that uniformity in action in the length, I'm talking about the length. The length of this move here is almost equal in distance and time to this move here. That kind of symmetry does destroy a market. Anyway, I didn't want to go into that, but oh well, it's all good, right? And so in conclusion, let's take a look at the current monthly. And we can see here we are trading below 69.10 on the S&P 500. We are also below the previous monthly closing high. So if you want to keep it simple for now, I would say watch this previous monthly closing high, and that is 2067.56. As long as we are holding below that line, so there's the line there, as long as we are trading below the line, the market is, I have to say, a little bit risky. Below that level of 2067, the market is tricky to the downside. Possibility is very high. But if the market can move back above that monthly closing high of late 2014, maybe it recovers. Also, we need to keep a very close eye to this level here on the monthly. The more we stay below this number, the more the market is looking to go down. So there you have your possibilities for the week. Things to consider. Of course, markets are always confusing. Dailies are good. Weeklies are so-so. Monthlies are turning around. Hourlies are great. It's all confusing. I get that. But if you need to make a decision on your next trade, I hope some of this helps. Otherwise, for subscribers to moathe.com, wait for part 2. I'll send an email when part 2 is ready for your consideration. Eric Moathe, good luck, peace, and blessings. Mwah. I am out.